Hello, my name is Chad Hart. I'm an extension economist with Iowa State University. And today I'd like to share with you brief summary of what's happening within the ag markets over the past few weeks and where we might be going as we're looking forward. And so, as we sit here, approaching Thanksgiving, the idea is that, the vast majority of the crop has been harvested. We do have a pretty solid idea of what supplies look like. Now it's a question of how demand will hold up as we move through the coming 12 months. And USDA has provided us not only a snapshot of what we're expecting for this year's crop, but they've given us an early preview of what we might expect as we're looking forward into the 2023-2024 season. And so as we look at the corn market, for example, the idea is that USDA, when they looked at this year's crop, it had been shrinking, but this last go round, as we finished up harvest, they did see it maybe being a little bit better than we had anticipated last month. So they ended up bumping the yield up a little bit, bumping production up a little bit here. So you can see here, we're looking at a national yield of 172.3 bushels per acre, with overall production weighing in at just over 13.9 billion bushels. So supplies are smaller than we had coming out of the crop of 2021, but they're still fairly, sizable given, history, if you want to look at it that way. This is still bigger than what the crop that we produced in 2019, for example. Now, as we look at the demand side for this year's crop, what USDA sees there is that they do see demands, if you will, shrinking to match the size of the crop. So as we look at the feed line there, for example, they have that pulling back about 400 million bushels compared to what we fed last year. And that is a lot of it's linked to the shrinking of the cattle herd as we look out there. You can see on the ethanol side, they pull it back about 50 million bushels there because we have seen some slower usage of ethanol, especially here in the early part of this fall. And then as we look at the export line, they're seeing some pullback there as well by about 300 million bushels, as we do worry about the state of the global general economy and the impact that high value of the dollar is having on our sales worldwide. And so when we add all those up, we see demand or quantity demand is shrinking by about 800 million bushels to sort of match the shrinking size of the crop itself. But in this case, supplies have shrunk more than demand when we look year over year. And so we do see a tightening market with continued strengthening in prices. And USDA held at its season average price estimate of $6.80 a bushel. Now, looking out into 2023, USDA is expecting corn farmers to look at those higher prices and to utilize that to plant more corn next year. As you can see here, going up to 92 million acres. So not as high as 2021, but much higher than what we saw this year. They're looking at a trend line yield of 181.5 bushels per acre. So that would bring us back up to above 15 billion bushels in terms of production. And as we look at the demand side of the market, USDA is expecting demand to rebound as well. You can see with 400 million coming back into the feed market as we look for hopefully, say it this way, hopefully a stabilizing as we look at the cattle side and maybe some growth as we look at the other livestock species out there. We do see a little bit of a rebound in ethanol as well, but probably the biggest thing I'll be watching for here is what's happening internationally. And so USDA is looking for about 125 million bushel increase in exports there. I think that's the key figure to watch as we're looking out into 2023. Given the rebound they're looking for there, they do see ending stocks building and prices coming back down, but still holding at a very strong level of $5.70. Now, as we look at the soybean table, similar sort of thing here. They looked at the 2022 crop and saw a little bit bigger crop than what we saw last month. But as we look overall, we're still talking about a fairly, small crop compared to 2021. But the idea is it's still a fairly good size crop when we compare it to demand. When we look at the demand market for soybeans, we continue to see growth here domestically through our domestic crush both for a biofuel purposes and livestock feed. Where we've been seeing the cuts in demand, if you will, to match the shrinkage in supply here is with exports as well, that international demand. So you can see here USDA is saying that, you know, international demand on the soybean side will slip by a little over 100 million bushels compared to last year. But stocks remain tight, prices remain high. USDA is looking at that 2022 season average price of $14 a bushel. Looking forward into 2023, here's where USDA is not expecting any additional acreage. I think that's a number to watch when we get to next spring. If prices remain strong, I think we could see some more area moving into soybeans as well. But they've got us at 87 million acres, trendline yield of 52 bushels per acre. So that would put us up around 4.5 billion bushels of soybeans. So they're looking for a strengthening crop looking out in the next year and strengthening demand. But most of that strength will be domestic demand. They don't see as much pull internationally there. And so stocks, again, still remain tight, but they do see, again, prices easing as we look out there into 2023, 2024, going down to $13 a bushel for that season average price. Now, when we look at the yields from this fall, for the most part, the drought did have an impact sizably when we look at corn yields across the country. In fact, the areas where we do see some blue on this map, especially as we look at the North Dakota and Minnesota, those were the areas that were really hit hard last year by the drought and were hit, if you will, less hard this year. And that's why we see some improvement there. But overall, some cuts compared to last year, whether you're looking at most of the states or even nationwide as we look out there. And that same pattern holds as you look at soybeans as well. It's those areas up in the northern plains and the lake states where we did see some better yields, or down south along the delta as you're looking at Arkansas and Mississippi having actually record soybean yields as we look out there. But overall, lower yields across the board for the most part, so shrinking supplies as we looked out there. And that's, like I say, been met by shrinking demand as we look there. And the biggest area where we've seen a pullback, at least on a quantity demanded basis, has been the export markets. As you can see in the export sales graph here for soybeans, where we've been so far with the 2022 crop is holding very close to where we were with last year's crop. And so the green line and the red line here are laying on top of each other, which is very close to the 5-year average. And in fact, as USDA is thinking forward for soybean exports for this year, they expect us to basically track along that 5-year average line as we look here. So compared to like 2020 crop, we've seen a significant pullback in the number of bushels we're exporting. But what has happened is that basically, while the bushel number has shrunk, the price has increased enough to, when you're looking at it a value basis, we still see a very strong export market. The question really is here, how well will this hold up as we look forward over the next 18 months, especially given some of the global economic concerns? And when it comes to soybeans, it's China that really dominates the discussion here, as they are and have been for quite some time our number one market for soybeans. And with them, it's been the case of worries about not only the general economy, but when they have COVID outbreaks, the shutdowns that occur there that have created, if you will, some significant waves within the soybean market. Now, as we're looking year over year right now, our sales into China are up a little over 11%. So we are seeing some more sales there. But as you can see, China's sort of pulling this market by itself here. As we look across the other markets for soybeans that tend to matter, it's a mixed bag out there. We're seeing some growth in Mexico and Japan, but we're seeing some pullback as we look at the EU and into North Africa. Now, when we look at the corn market, we haven't been able to hold up with that 5-year average. And in fact, that has been the concern for me as I'm looking at the corn market, is that our sales so far out of this year's corn crop have been slow, but we are starting to see an upkick. If you look at that last data point on the red line, we do get a little bit of bump up in that slope there. And what USDA is hoping that we find is that we get a lot closer to that 5-year average, but we won't quite catch it by the end of the year. Again, To look here, that 5-year average says by the end of the marketing year, we'll have exported a little about 2.25 billion bushels of corn. USDA shooting for 2.15. So fall about 100 million bushels below, but still, closing a lot of the gap that we see right now. And the major challenge for the corn market has been we've seen a pullback everywhere. Now, the biggest pullback has been in China, but I think the market that we're going to key on the most looking forward here is Mexico. Mexico has announced a policy of by 2024, they would like to be only importing non-GM corn, but the challenge is going to be finding that much non-GM corn. Now, there has been some concern that we're already seeing them starting to pull back on some of those purchases of U.S. corn because of that. But also within the past week, we have seen Mexico step in and purchase significant amounts of corn, not only for this year's crop, but also for next year. So I think you are seeing companies within Mexico starting to pull in more corn in preparation for that 2024 deadline so that they have plenty of corn on hand if they do find it more difficult to find non-GM corn starting in 2024. But as you can see here, it's not just China and Mexico where we've seen those cuts. It's hard to find a market right now where we are shipping more bushels of corn out to them this year as we did last year. But even with that pullback again, prices have helped cushion the blow here. While export bushels are down, export prices have been significantly higher, helping reduce the impact here when we look at the corn market. Now, when we look at the biofuel side, we also see some recovery there as well. When we're looking here over the past couple of weeks, we have seen ethanol grind ratchet back up again to about 205 million bushels a week. That puts it around the average of what we used to see back in 2016, 17, 18. And so it's good to see this market holding at those historical levels. The question going forward will be, okay, can we maintain this and possibly even see a little growth as we look out here? USDA's, like I say, forecast basically says we'll probably hang around that historical number, thinking back to especially what we experienced in 2018. That would be the target that we're looking for here. Now, at the same time, too, though, we have seen ethanol stocks getting drawn down. Another good sign that this market is, that we're using ethanol fairly regularly, and that's helping pull on the corn market and pull those, bushels of corn moving into the ethanol market. So we have seen some, let's call it resilience in corn demand, especially as we moved into the winter time here. And that has helped stabilize prices where they sort of are right now. So as we look at how those season average price estimates have moved over the course of the past, in this case, couple of years, you can see that, we've definitely recovered from the COVID lows. We've come off the, let's call it the Ukrainian war / drought highs that we saw in the late spring and early summer this year. And, basically since harvest started, we've found a niche that we've sort of, stabilized within, with corn holding in this 650 to 675 range. Soybeans, a little bit wider range because we've seen more volatility within that market due to the COVID shutdowns within China. But it's holding in here at, say, the 1350 to 1450 range. So it's a wider range, but it's still a very good range for both these crops to maintain, because that is helping to hold profitability within the crop side of the markets. And as we look forward into next year's crops, we're seeing that same sort of stability, if you will, working into the season average pricing here. Again, the levels are a bit lower than what we're capturing for this year's crop, but they're still at very strong levels as we look out there, with corn weighing in that $6 range, so a little bit better than USDA's 570 estimate, and with soybeans holding in here around 1350. So again, a little bit better. So the markets right now are showing a little more bullishness, if you will, of looking forward in the next year's crop than USDA is. And I think a lot of that is built on the idea of that while we have seen a lot of concern about the global economy, we continue to see demand be fairly resilient, and that plays well for U.S. commodities as we look forward. Well, with that, I want to thank you for your time. Again, this is something we try to do at least once a month as we look out there, sort of sharing what we're seeing within the crop and ag market space and how that might impact producers as we look forward. Again, my name is Chad Hart. I'm an extension economist with Iowa State University. I hope you and your family have a wonderful Thanksgiving season, and we look forward to seeing you with the next video.